When beginners start Forex trading, one question comes up very often. How much money am I actually trading? This is where lot size comes in. Lot size simply means the amount of currency you are buying or selling in a trade. In Forex, trades are measured in lots instead of individual units. A standard lot equals 100,000 units of currency. A mini lot equals 10,000 units. A micro lot equals 1,000 units. Don't let those numbers scare you. Most beginners trade micro lots, not standard lots. Let's use a simple example. If you trade one micro lot on your USD, each pip movement is worth about 10 cents. That means small price movements, small gains, and small losses. This is why micro lots are safer for beginners. Think of lot size like the volume button on a speaker. Low volume means small sound. High volume means loud sound. In Forex, small lot size means low risk. Large lot size means higher risk. Choosing the right lot size is more important than finding the perfect trade. Many beginners lose money not because they are wrong about direction, but because they trade too big. The key takeaway is simple. Lot size controls your risk. Start small, learn the market, and protect your account. If you're new to Forex and want clear step-by-step lessons, subscribe to this channel. We focus on understanding, not hype.